Thursday, October 26th, market analysis, Stan Ehrlich, 9:53 California time, and we are dropping quickly. You know, I start out with the indexes and usually with the E-mini. You've got the Christmas futures contract in front of you. We are oversold again. Now, we are also, and I think I may have made a mistake. Remember, on October 10th, the market started moving up above the neckline on the previous head and shoulder top, which started June 16th. We had bearish engulfing sell signals on the exact high day, regardless of what pattern it was, if any. And the neckline acted perfectly on the downside breakout, stopped rallies, dropped approximately halfway to its objective. And then we had a very bullish October 6th ER buy signal, which worked great for a few days, including the fact that the market got above, stayed above, closed above for 6 days or so. The neckline, which is a no-no usually. You're not supposed to do that. It kills the pattern and it puts it back in a neutral or even bullish situations. So it didn't stay there. It came back down below the neckline. And now we see in the last 3 or 4 days, new lows for the trend down. So was this a fake out? Yeah, maybe. And the downside objective originally was 4,100, give or take a squeak. Here we are, not very far away. We're down today, 5.25 on the spider, 54.50 on the E-mini Christmas contract, and no sign of it turning around yet. But objectives may or may not get fulfilled. Oversold conditions exist, and I want to show you other charts here. This is the spider. We have dropped into, starting yesterday and now much more today, a major support area, and in fact relatively close to the low of that support area, which would be around 411. Oversold again, as you would expect. If the E-mini is, the spider's probably. And a new low for the month. So the October lows could be today. No sign of it turning up at this point. Next, we have the 1 minute for the spider. We have been making new lows often. This morning on the opening, little rally to get back to unchanged, give or take, and a new low, a rally, and then new lows, and nothing to speak of in terms of rallies. This looks like a market that could continue to chew its way south today. Next chart is DIA. It has finally today made a lower low than the good, very good, bullish engulfing on October 6th, which sent the DIA up for a little over a week. But it never got to the neckline of its head and shoulder top. That was never violated. That would have been up to 344 almost. And the high of the rally was 301.75. So here we are. The head and shoulder top is still intact in terms of the formation, etc. I have erased the downside objective, which I think we have come extremely close to, if not maybe fulfilled. And we're coming back to some other support areas. Not quite oversold. So far, that's the only one. QQQ, I'm sorry, this is the Russell 2000. We have a, do we really? We had at one point a bullish engulfing, but not anymore. Currently, we're down on the day a little. But if we close higher today, our low has been lower than yesterday's low, and the high has been higher than yesterday's high, and we are oversold. So it needs a higher close to stay green on the close for an official buy signal. And it's only down a tiny 16. I got to also point out, this is very, very interesting. The bottom of the support area is just a little bit lower than where we are now, and it is the lowest lows for years. You have to go all the way back to November 4th of 2000 in order to get lower than the price levels we are challenging again, like we did, and it turned around June of 22, and also in September, October. No joke about that. Last year, the 13th of October. So this chart looks like we are about to have a very profound, longer term rally, but it's the only one that's giving me any significant evidence that it could do the job. Again, I really need to have it close higher. Next is the QQQs, oversold, reason to believe it could turn up at any time. But today, in fact, yesterday, barely, but yesterday, it actually started to break out. Maybe it was just a little bit higher than that. Okay, it was basically starting to break out of this pennant formation that is usually a bullish formation. So this downside breakout is really kind of bearish. We're getting mixed signals here to some degree. Things are not quite as clear as they are often. So the downside support area is probably in the ballpark of the downside objective of the pattern, which is not the head and shoulder anymore. It's a downward slanting wedge that just failed and dropped off below the support line across the bottom. But it's oversold. So I'm watching very carefully for any buy signals. Next is the NASDAQ futures Christmas contract. Same story here. Broke basically yesterday or barely the support line. And today, definitely no ifs, ands, or buts about it, but starting to get oversold. Now, that's not unusual on downside breakouts, oversold conditions. So maybe another day or two of this, and then a rally. Next, yeah, the Christmas E-mini 1 minute contract, although a little delayed data, is I've just made new lows in the last 10 minutes or less. Okay, so I'm going to show you the October low chart that I've had on my screen almost every day now for at least a couple of 3 months. I knew about and calculated and told you that in the last 30 years, it's only been 3 times that we haven't had a significant buying opportunity in the calendar month of October. Look at what we're doing today. We're dropping very sharply, last 2 days, in fact. Finally, we're oversold, and I'm right on the edge of my guesstimate of the zone in which I was hoping to get a buy signal or a market turnaround. So I'll be damned if it's just about on the edge there. Another day or two lower, and obviously I'm going to be in the green and even closer to the price level at 406, 407 and a half, something like that I was looking for on the date of October 16th, which I didn't get. But now I'm getting much closer to the price. I'm just a little late in the month. Wow. I think we're going to see an October low, and that means we ain't got too many days to wait. Futures. All right. E-mini from another standpoint at the bottom of support area. Oversold. Looking like a price level which it could turn up, but it sure as heck hasn't been doing it in the last half an hour or anything. We are, for all practical purposes, on the low tick of the day. Next chart. NASDAQ, same story. Not any particular support here. It's got a little bit more to free fall, maybe down to 13,700. Yeah, definitely possible, I think. Next chart. We are looking at the bond interest rate futures starting to come back up today. On Monday, we had a buy signal, an ER buy signal, and it is still the low of the trend. Now 3 days later, and now we're starting to rally after a slightly lower low than yesterday and the day before. We are long from approximately 109, and that would be an ER1 long position. And we are also long with an ER3 on the date of October 25th, yesterday, from approximately 108.22. 23 to be exact, 108.23. So 2 long positions from the ER, one of them from ER3 overnight. Looks like the ER3 scalp, which we got into yesterday, also did lose a little money, very little, maybe 6, 7, 8 ticks or something. ER1 scalp almost positively did very, very well. Remember, we got total 4 version, 2 types of trades, and they're all called ER because they stem from the same basic signal, that green way that the market moves when you are in my custom RSI oversold conditions in a certain time frame. Next, we also got almost the low day on the 10-year notes, which came very close to stopping us out of our longer term positions, and now is back above even the ER3 that we bought yesterday, which closed with a loss. It was uncomfortable, and it got a little bit worse, during the morning, but now it's a slight profit momentarily. We'll see how this goes, both long notes and bonds. Next, crude. Doji trying to bounce off of support, third day of effort, doing a so-so job of it. Let's see what happens. I'm waiting. Next, natural gas sold almost the exact high day on ER1, also got an ER3 short, and this is the ER3 trade. That is the entry, ladies and gentlemen, on the opening of this day. So we did apparently have a loss, a little bit of time frame during that day, and it's pretty small from where we're short to the high of the yellow bar, which is the high of the day. So profit on the close the first day, more. That's 7 days in a row, more. We had an oversold condition at the beginning of the week, higher close, a little rally Tuesday, Wednesday, and today we are stopped out. Great trade, all automated, no ifs, ands, or buts about it. Default input numbers. So that's it. Now I wait for another signal. Opinion-wise, we're pretty much at a resistance area, but we're nowhere near overbought. So I'll keep quiet for a day or more. Next, heating oil. No signals at the top and bottom on this particular occasion, unfortunately. We have had our great ones. That was a sell signal on the top there. That was an incredibly good one on the top there. We had a good buy signal that did okay on the bottom. That's a sell on the highest high, and that's a sell just after the highest high that did fantastically. Yeah, that's a few. So I'm waiting. I'm interested in the way this thing is bouncing around because there might be another shoulder, and yeah, a head and shoulder top could form. Next chart, gold. We bought the low day, ER1 right there, trailing stop, tick by tick, minute by minute. You don't see it move that way on the daily chart because we update on the close of each day. But during the day, real time, even if you are looking at the daily chart, it does update. And therefore, we're not showing every single twist and turn on this particular chart on the dailies, but the trade's the same. And up and up and up, and we are still long gold and about to have a new high close since our buy at the bottom on October 6th. We almost have a new high close. Let's see what happens in the next couple of days. And our stop keeps coming up. It's great. This is a great one. Precious metals have been fabulous to us this year. Now, this is a gold trade with a different input and therefore acted differently. The stop, trailing stop. The entries are pretty fixed. I don't have many problems with them at all. The offset is somewhat, it is definitely adjustable. Not supposed to do that, but you could. This trade had default inputs, and that's where we got out. And as you can see, the market at the moment is a little bit higher than where we got out, but that was a hell of a great trade. Next, and we're out of it, silver. This is not a sell signal today. Occasionally, you guys that have been around a while know that you get bad data, and I have to make an adjustment here. This is not a sell signal, so disregard it. It's simply a little bit of a down day. Next chart, platinum. We've got the bottom. Remember, every time you see red or green vertical bars or candlesticks, we are long ER3 or short 1. We are either long ER1 or short ER1 on that day. Now, this is where we bought it. right a little bit of a high the previous day on October 6th. I can't tell you that we got stopped out or not. It depends upon the kickers. That is the trailing stop multiplier in effect. And it's doing, if we're still long, fantastically. We also got a chance to get in ER3s, although a little late. That sell signal on top did fantastic. Unfortunately, no ER3 fills, no rally. ER1 just simply made money one day, next day, next day, next day, next day. This ER1 new long position made money. Next day, a little bit of a loss. Good, 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 good. Okay, so I'm sorry. Next chart, high grade copper. Resistance, probably going to make new lows very soon. Next, soybeans. We're a little bit of a profit on a currently held ER1 and not stopped out. If we are stopped out, it looks like it'll be a very teeny loss, but you could have tightened the stop up and actually been out of the market already with a profit if you wished automatically, especially since it rallied really nicely after we got in for 1, 2, 3, 4 days. And right now it's holding a support. So I'm not going to be surprised if it starts to rally some more, which keeps us in the ER3. I'm sorry, the ER1 overnight position with this particular trailing stop. Next, bean oil. Wow. We're short from the second high of a double top, which in itself was the head formation, head and shoulder top formation, which our system ER signals got short on one of the two double tops. The second one, great, that's the best one to sell on, and has been staying short with this trailing stop, period. We are now, I don't know, what, 2 months? No, 1 month and a week later, 5 weeks later, almost a new low ground, but we got oversold a couple of days ago. So I'm not surprised we had a little bounce. I said that would look likely. Standard comment when we're getting overbought or oversold, and we're not stopped out. And now it looks like it it's going to make new lows. Next chart. Meal. I don't know. I'm getting a little confused. Now I can tell you that it's overbought and in a major resistance area. I'm kind of abandoning this gigantic kind of head and shoulder top looking situation. It's going to take quite a while to work itself out, a month or two, because of its size. It's huge if it is one, and I'm skeptical, so I erased everything but a trend line across bottoms. Next chart. Corn going to go the way of wheat, as I said before, and again and again. And this is the way wheat's gone. Downside breakout, rallies failed, new lows, rallies have failed, almost new lows, a little higher today. Next chart, going to make new lows. Cattle got oversold on Monday. I said likely to rally little, maybe back up to resistance. I'm sure those are my words. Next day, tested resistance, pulled back to almost unchanged. And now we're just kind of fiddling around a couple of days, but still not quite out of the oversold condition completely, the way I like it. So very soon, I think it's going to make new lows without getting above Tuesday's high. Next, hogs. Buy signal yesterday. I started screaming bloody murder even though it was testing resistance. I mentioned that that could be a problem. So far, no. The signal's working and we're chewing into resistance. But you got to watch this carefully because, it's supposed to stop in resistance. Now, we're not in an ER3. It didn't come down to our bid, the green dots. And ER1 would have made a small profit of some minor source yesterday. ER1 scalp. ER1 overnight is doing very well. We're long from approximately the closing price of yesterday, and we're up a little bit this morning, so no complaints, but it's nothing to brag about. Next, OJ, I'm waiting for something spectacular, but it doesn't look like it's going to happen soon. This looks like a gigantic long-term blow-off top. I can't believe it, but I checked this out and you can see it right here. This continuation contract was trading at 50, 52. And that was only 3 years ago. Two years ago. It's now 390. Next chart. Cocoa. Blowing through resistance. Now, this is kind of what I expected out of the stock indexes like the NASDAQ and Qs. They have the same, almost the same kind of formation, not quite, tilted down instead of flat coming up. So this had a bullish bias to begin with, and it's breaking out of it today. Now, there's no signal involved, and we are overbought. But again, on breakouts of bullish or bearish style, it's not uncommon to be overbought or oversold at the time, which it is overbought. I think another day or two of a little more overbought could very well happen. And then we're going to see a retracement back to the blue line, cyan line. Next, bearish engulfing coffee yesterday, huge reversal, new highs for months and new lows for 3 previous days, all in one day yesterday, and even closing at the lowest low for the 3 previous days. So ER1 did very, very well for a scalp. ER1 short is still very profitable, and we are still a little lower on the day, so it's doing a little better. Unfortunately, ER3 has 2 more days or so to get filled, and we're unable so far on a new short ER3. ER1 overnight's doing great. Next chart, sugar. I don't know. False upside breakout, that's what it looks like. Not quite oversold, bought, excuse me. So didn't have that to go on. But anytime a market makes new highs for extended periods of time, I'm saying weeks or more, and then does not close in the new high ground, you're looking at a potential trap. And that's exactly what it's doing today, dropping off pretty sharply. New lows for the last couple of days. And I think it could slip off some more. The bull trend line is something to definitely pay attention to, and it is in a ballpark zone of a modest amount of support in here. I'm going to say 26.5. Next chart. Cotton, the rag, rallying a little, was oversold, might get back up to the red resistance zone. I just see a giant flat top, long-term, basically 1 year rising bottom type of a wedge. Flat top right triangle is referred to. And if you break through the red zone, especially with big volume and a large rally, et cetera, classic breakout, that could be super bullish for cotton. Next chart. E-mini again. Looks like it's sold. We hit the low so far. Don't get too excited yet. And I'm going to go back to look at the 1 minute charts real quick here. Yeah, okay. So at 10 o'clock, 16 minutes ago, we hit a minor low. We've had a little rally, and it's looking a tiny bit more interesting because we're challenging a minor resistance area that it topped out at. So if it can get above that, well, you know, I'd be a little more interested, but we're still down 4.5 points for the day. Keep that in mind. If this were to scream back up again, or in the next few days have a bullish engulfing, I would be screaming October low on that date, but it hasn't happened yet. You guys have a great day. Mañana.